All right. With that being said, let's dive in. So the first topic we are starting with is internal reconstruction. So internal reconstruction is generally done by the loss-making company. The company who are suffering losses generally do this activity called internal reconstruction. Meaning internally they are trying to work out something so that from loss-making scenario they go to no profit or no loss scenario or little profit making scenario. But basically this is done by a loss making scenario, loss making company. Compulsory only loss making companies are no. It could be done by anybody, but generally it is done by loss making company. So in this particular internal reconstruction, what does the company do? They will approach the stakeholders, not shareholders. The company will approach the stakeholders. Stakeholders means equity shareholders, preference shareholders, creditors, debenture holders, bank loan people, everybody will be approached by the company. And what will the company tell all the stakeholders? To sacrifice a portion of their claims. Let's say creditor, company has to pay the creditor 1 lakh. Company will tell, hey creditor macha, I don't have money da. Instead of 1 lakh, accept only 90,000. Meaning from 1 lakh, this liability decreased by how much? 10,000. Meaning creditor indirectly sacrificed how much? 10,000. Like this, all the stakeholders will be asked to sacrifice a portion of their claims. It could be 10%, 50%, 60%, whatever. All that sacrifice portion ka journal entry we need to pass in this particular topic. And all this journal entry is routed through one dummy, not dummy. Dummy account. What is that dummy account? Ka name? Capital reduction account, or also known as reconstruction account. So all this increase in liability, etc., is routed through one account called reconstruction account. Reconstruction account ka another name is capital reduction account. Some books also will call this as reorganization account. But our study material only uses these two. One of those two you can use. Okay, sir. All right. Then, sir, let's say asset value reduced. What is the journal entry you will pass? Sir, asset has debit balance. How do you reduce it? Credit. What will you debit? The God. Who is the God in this chapter? Reconstruction account. So the journal entry will be reconstruction account debit to assets account. If asset has reduced by 1 lakh, you will pass the journal entry reconstruction account debit to asset account 1 lakh, whichever asset. If land and building has reduced by 1 lakh, you will pass the entry reconstruction account debit to land and building 1 lakh, like that. Sir, if liability has reduced means liability has what balance? Credit balance. How do you reduce that? Debited. Credit will be given to God. God is reconstruction. So the journal entry will be the liabilities account debit to reconstruction account, like this. So only assets and liability will get reduced, or even share capital may get reduced. Share capital also may get reduced. Let's say share capital reduced. The existing share capital is 1 lakh. Okay, you put full tuna to equity shareholders, and how much you told them to sacrifice? 60,000. Existing equity share capital was 1 lakh. Revised share capital is only 40. That means they sacrificed how much? 60,000. So if equity share capital or preference share capital, if it is reduced, what is the journal entry you will pass? Don't pass the journal entry equity share capital account debit to reconstruction account. We have to pass it. What's it? Old share capital you need to cancel fully, issue new shares to the extent of whatever value, and the balance sacrifice portion only you transfer it to reconstruction account. So why can't we pass like this? Your equity share capital reduced only by 60,000. No, why can't we do it like this? Sir, currently, no, the face here, what will happen in internal reconstruction is the face value of the share will be reduced. Let's say original face value of the share was 10. Revised face value of the share may become 5, 10, 6 or whatever. Okay, in this example, it has become 4 because 6 rupees is sacrifice. No, that means from face value 10, it has become 4. Face value is the value printed on share certificate. Old share certificate has what value now? 10 rupees. Is that old certificate of any value now, or go in the? Go in the. That means what? What will the shareholders tell? Take back your old certificate and give me new certificate which has how much value? 4 rupees as the value. Hence, entire old share capital you need to cancel and issue new shares to the new face value, and balancing figure only will transfer it to reconstruction account. So all this we will apply in problems. Quickly we are revising this and then we will apply. That's first how the approach here is. We will concepts, everything will revise in one shot. Then we will take up few questions and again develop or redevelop or rework on our concepts. That's the approach we'll be following for all of our chapters. Is that okay? All right. So after doing all this drama, if reconstruction account has a balance, you need to transfer it to capital reserve. But before that, first check if P&L account has a debit balance. This internal reconstruction is done by which company I told? Loss-making companies. Yes. Sir, even after doing internal reconstruction, can you still show the loss? First of all, why did the company do internal reconstruction? to get away from this loss making position. Yes, no, sir, if all the liability holders, if they are sacrificing, means the loss will be same or loss will get reduced. Like here earlier you had to pay the creditors 1 lakh. Now you are paying only 90,000. That means 10,000 if you are not paying, means is this a loss or is this profit for the company? So whenever shareholders or stakeholders sacrifice the portion of their claim, it's a profitable scenario for company, no? That's the reason after doing internal reconstruction, if you have any P&L debit balance, P&L debit balance means what, sir? P&L debit balance means loss. That has to be compulsorily written off. Whether the question says this or doesn't say it, compulsorily you need to do. Okay. So P&L has debit balance. How do you cancel it? Credit it. What will you debit? Reconstruction account. So the journal entry will be reconstruction account debit to P&L account. This may not be given in the adjustment, so watch out. Every reconstruction problem, we still have to do this. Okay, Sarji? Yes, sir. Next one, sir. That's what I've written here. Write off P&L preliminary expense. Preliminary expense, deferred revenue expenditure and all is outdated concept. Most probably it will not get tested in your current syllabus. But if at all they give, that also you cancel. Sir, why, sir? Sir, preliminary expense, where will it eventually be transferred to? P&L. What are you doing for P&L debit balance in this chapter? Canceling. That means this also, preliminary expense, deferred revenue expenditure also you need to cancel. Is that okay, sir? Whether the question says this or doesn't mention this, you still have to compulsorily do this, provided internal or reconstruction account has a balance. If reconstruction account has balance, write off these. So if no balance is there, means don't do it like that. How much ever balance is there, to that extent you do this particular activity. Yes, sir. Rare scenario, but if at all in this chapter, if they give you company already has some reserve, general reserve, capital reserve and all, if at all they say, quite stupidity in my view, because sir, it's a loss making companies. Loss making companies will have reserves. Reserves will be created from profits. Is this company making profits or a full loss? Full loss. But if at all they give this in the question, don't question the question. Whatever is there, take it. So if at all they give you reserves like general reserve or capital reserve, you can utilize that. You can utilize means transfer this general reserve or capital reserve first to reconstruction account or to capital reduction account, and then do all this particular activity. Okay. Then afterwards, if capital reconstruction account still has any balance, transfer it finally to what? Capital reserve. First only capital reserve as a balance, means from capital reserve you transfer it to reconstruction account. After doing all this activity, again you transfer it to capital reserve. That's what they say in Kannada, no? Kere neerannu kerege chelli. Okay, like that. Okay, first you take it from capital reserve, do all your drama, then again push it back to capital reserve. That is what is all this drama about. Yes, Saru? Super, sir. Okay. Sir, one more point is, if any dividend is sacrificed, if in the problem, if they tell some equity shareholders or preference shareholders, if they have sacrificed their dividend, should we have to pass any journal entry for it? No. No journal entry is required for such transactions. Sir, why, sir? Sir, to cancel something, first you need to account, correct? Now, I tell you to cancel creditor. 1 second, I'll delete all this is extra. Sir, I ask you to cancel this creditor. Can you cancel? Yeah, because creditor is shown in our books currently at what value? 1 lakh. So can you cancel? Yeah, you can cancel by passing a journal entry, creditor's account debit to reconstruction account. Sir, dividend. It's what sort of company? Profit making company or loss making company? Loss making companies. Will they declare dividend? No. That means, is this dividend there in company ka balance sheet, sir? Is this particular dividend there in company ka balance sheet? No, because company has not declared it. Company will declare only if they make profit, but this company is suffering loss after loss after loss. So this dividend is not declared. In the adjustment, they will tell, we have not paid the dividend to preference shareholders since 5 years. They sacrifice that. Should we pass any journal entry for it? 5 years dividend, have you already accounted? No. If you have accounted something, then you can cancel it. If you have not even accounted, means how can you cancel? So for such a transaction, no cancellation journal entry is required. Okay, Saru? Okay? Alright. Sir, in this particular transaction or in this internal reconstruction they also give you something called, some expense will be there. We incurred some penalty of 10,000 rupees. Sir, penalty is an expense. Okay, for one expense, you want to prepare whole P&L account. No. So every expense here will be routed through which account? reconstruction account. Normally, what is the journal entry for penalty paid, sir? Penalty account debit to bank account. How much penalty you pay? Let's say it is 10,000. Then penalty is a loss. Where will you transfer that loss to? P&L account. So the second journal entry will be P&L account debit to penalty 10,000, 10,000. This is the journal entry you will pass. Sir, add these two entries. What happened? Penalty debit, penalty credit. Effectively, what is the journal entry? P&L account debit to bank account. How much, sir? 10,000. Correct? Logically, this is a journal entry for every expense. In this chapter, P&L, are you showing or cancelling? Cancelling. Using which account? Reconstruction account. Hence, instead of P&L, what will we debit here? For all the expense, the journal entry we pass is reconstruction account debit to bank account. Okay, Saru. Sir, if for expense, this is the journal entry, means for income, the journal entry will be ulta, which will be what? Bank account debit to reconstruction account. So all this, they will give it in adjustments. All you have to simply do is pass journal entry, and after that you need to prepare balance sheet. Reconstruction account, yeah, you need to prepare reconstruction account ledger, that is your working note. After that you need to present it in balance sheet. Okay, Saru. So that's all is the scope of this particular chapter. Now can we understand these things better with the help of few questions? Done. So let's go for online also. Everybody are there? All good? Yes, awesome. Great. Okay, so sir, any idea how many chapters will be covered today? We'll be covering about 5 or 6. I'll tell you at the end. For now, we'll get started with this. Okay, don't worry. I've planned it in about 5 days. By Wednesday, I'll finish all your syllabus. Everything will be covered. So now, same approach, sir. First, all the concepts, then immediately apply all the concepts in problems. Okay. See, the thing is, if I want to cover this revision faster, I can only revise through concepts. But I feel, no, sir, revision will be more effective when you apply it in problems, because accounts at the end of the day is still a numerical paper. So unless you solve few questions, no, you'll not feel like you did accounts. You'll feel like you did law, which I don't want to give you that feeling. So let's take up some questions. Can we go? Any problem, Ada? Someone has come in, so we can. Ours is like our Dharma Chatra. Okay, anytime you can come in, anytime you can go. They're asking. Yeah, come. It's okay. Come. Okay, madam came. Nice. Diversity, unity in diversity, we say, no? Yeah, we reached that. Okay, sir, is there class on Sunday? Sunday, I'm traveling people, so Sunday will not have class. So the schedule will be Friday, Saturday, Monday, Tuesday, Wednesday. These are the 5 days. Okay, I'll tell you the schedule once again tomorrow. For now, let's not waste time in that regard. Okay, so balance sheet of this particular company they have given. Sir, in this problem, no, balance sheet is waste. Reason is, everything will be there in the adjustments. What you simply have to do is forget the balance sheet later, go over all the adjustments. Fatafat, we'll start going through one by one. Court approved a scheme of reconstruction with effect from 1st April 20x2. First, preference shareholders have to be written down by a law. Written down to 75. That means from whatever value you are bringing it to 75. Now go back to balance sheet. What is preference share capital ka face value? 100. From 100 you are bringing it down to 75. So how much is the sacrifice? 25. So what is the journal entry for this? You only passed entry for sacrifice portion, or old shares you will cancel? Sir, from face value from 100 you brought it down to 75. So old preference share capital fully you need to cancel and issue new preference shares worth 75. Okay, so what will be the journal entry for this? Preference share capital account, or use the same name that they have given in the question. What sort of preference shares are these? 6% cumulative preference share capital account. Debit how much? 4 lakhs. Okay, just check the screen. Okay, to what account? Did you change the dividend percentage or same? So they did not mention anything. Okay, if you don't mention anything, you can just write preference share capital or keep it as same. You can write 6% preference share capital. How much now value? 75 each. How many preference shares you had, sir, before? 4,000 preference shares. So 4,000 preference shares are there. Each ka revised value is now only 75. 75 fours are 300. So this will be 300. From 4 lakh, the share capital value became 3 lakh, means how much have they sacrificed? 1 lakh. That will go off where? To reconstruction account or capital reduction account, arrived as a balancing figure. Or you can do 4,000 into 25 also. First entry. Okay. Alright, this space is okay for everybody. I would like to maintain this for all the chapters. That's okay, right? Online also, you have to be okay because I don't have much time. Yeah. All right. Sir, equity shares are reduced to 2 rupees. Sir, what is the existing face value of the share? 10 rupees. From face value 10, the new face value has become 2. So how much has it reduced by? 8 rupees. So 8 rupees has been sacrificed. So the journal entry will be equity share capital account debit. How many shares? 75,000. So the journal entry will be equity share capital account debit 75,000 into 10, which is 7.5 lakh to what? To equity share capital account. How much is the revised face value of equity shares? 2 rupees. So 75,000 into 2, which is 1.5 lakh. Balance portion is your sacrifice, which will go off to either reconstruction account or capital reduction account. That is one. Next adjustment of the preference shares dividend, which are in arrears for 4 years. So the moment you did dividend arrears adjustment, now go back to balance sheet. Quickly scan Madi. Whom? Not the people. Balance sheet. Okay, here. Any preference dividend are you able to see in this balance sheet, sir? No. Loss making company, no. So will they declare dividend? No. So is it accounted? No. Now you know what they'll say in adjustment. This is sacrificed. For this sacrifice portion, will you pass any journal entry? No. But check what they told in the problem. How many years it is in arrears for? 4 years. Entire dividend got sacrificed. Huh? No. 3/4 to be waived. That means 3/4 is sacrificed. So how much ever is the dividend in that 3/4 they have waived off means they have sacrificed. So for this, do we need to pass journal entry or no entry? No entry required. Sir, in 3/4 if their sacrifice means balance 1/4 has to be settled. What did they told? And equity shares of 2 to be allotted for the remaining quarter. Meaning remaining quarter means 1/4. For the 1/4 portion, is it sacrificed or is it paid? Paid. Did you pay this dividend in cash or through shares? Shares. What shares? Equity shares. Sir, if you what this is also like an expense only. What should be the entry? Reconstruction account debit to bank account. But did you pay cash or bank here or equity shares? That means will you write reconstruction account debit to bank? Nah. What will you write? Reconstruction account debit to equity share capital. To what extent? 1/4 extent. First of all, calculate, sir. How much is the preference share capital? 4 lakh. What percentage preference shares are these? 6%. So 4 lakh into 6% if you do, you're going to get 24,000. That is 1 year ka dividend. Here was 1 year ka dividend in arrears or 4 years? 4 years. So 25 4s is 96,000. So totally 96,000 was the dividend in arrears. Okay, in this 3/4 they waived off or sacrificed. Any journal entry for that? No. For 1/4 you calculate, sir. 96,000 into 1/4 is how much? 24,000. For this 24,000 also will you say no entry or you have to pass entry? Pass entry. What is the entry, sir? Reconstruction account debit to equity share capital. Passed or check. Oh, perfect. This is the entry. Done, Naji? Okay, that's all. Can I move on to the next? Okay. Look at the next adjustment. Interest payable on debentures is to be paid in cash. Not sacrificed though. Paid. If it is settled. First of all, go back to your balance sheet. Have you accounted any interest payable in your balance sheet? Yeah, this is your notes to accounts. You are able to see in other current liability, they have included interest payable on debentures. How much? 22,500. It's a liability. Basically, there's nothing but your outstanding interest. Is it sacrificed or settled? Settled. What's the journal entry? Outstanding debenture interest, or use the same name. What name are they saying? Interest payable on 6% debentures account debit to bank account 22,500. Passed off. Somewhere they must have passed here. Interest payable account debit to bank is what they passed. I say use the same name as given in the question. Don't change the names. Better it is. Okay, Saru? Yes, Saru. Next one. What is the next one? Debenture holders agreed to take over freehold property whose book value is 1 lakh but at a valuation of 120. Book value of that property here. Book value of that property is only 1. Was it taken over at 1 or 120? That means property value same or property value increased? Increased. From how much, sir? From 1 lakh it became 1,20,000 means property value increased by 20,000. Yes, sir, Saru. Sir, if any property value increases, asset value if it increases, should we pass any journal entry here? Yes. What is the journal entry to increase the asset by 20,000? Asset account debit. Which asset is this? Freehold property. So the journal entry will be freehold property account debit to revaluation reserve. This is done through reconstruction account. So don't apply AS 10 ka concepts and say I'll pass it to revaluation reserve. No. All this has come through internal reconstruction. So the journal entry will be freehold property account debit 20,000 to reconstruction account or capital reduction account 20,000. That way. Fine, sir. But this asset, is it there with you or taken over? Taken over. By whom? Debenture holders. Do you have any debentures in the balance sheet? Yeah. How much? 3,75,000. Okay. So that means, will the value of the debentures be 375 now or some portion settled already? In this 1,20,000 is already settled. Anything else they have told? What did they say? In part payment of their holding. Is this full settlement or only part payment? Debenture holders say, give me your property for the time being. Later we will see the later portion. Balance portion you can pay later. Okay. And also to provide additional cash of 1,30,000 secured by a floating charge on company assets at the rate of 8%. So let's do a thing. Let's put that on hold. First, can we pass an entry for this? Okay. So first you have to increase the asset. What is the journal entry for that? Freehold property account debit to reconstruction account. How much, sir? 20,000. They have done 80 to 500. I'll come to that. So far we have identified how much? 20,000. So we have given the entry for this. Yeah. That's all, or this property was taken over? Taken over. By whom? Debenture holders. What are we calling it as debenture holders in our books, or are we calling it as debentures? We are calling it as 6% debentures. So that means after takeover, this liability ka value will be same or it will reduce. Reduce. How much value did they take it over by? 1,20,000. What's the journal entry? 6% debentures account. Don't say debenture holders. You have to use your common sense whenever confusion is there. Do we show debenture holders account in our balance sheet or debenture account? Debenture. So only liability is called in the name of debenture means that name only you should use. So the entry will be 6% debentures account debit 1,20,000 to freehold property. Like that. So what about remaining? Remaining you will pay later. Okay. So the chance pay dance, no sir? Yeah. Not everybody will sacrifice. Some portion may also say, give me extra also. Possible. Okay. So reconstruction need not necessarily be every time sacrifice. Some of them may get this extra benefit also. Don't question the question asked. Okay, let's move on to the next thing. Okay, look at this part. And to provide additional cash of 1,30,000 secured by floating charge of company's assets at the rate of interest rate of 8%. Drama. Unnecessary drama queen. What they're trying to say? New debenture company has issued, whose interest rate is how much? 8%. So that's all. That's what they mean by provide additional cash of 1,30,000. Who will give additional cash? Debenture holders. Will they give it at free of cost? No. Company will issue debentures to them and debenture holders will issue what to the company? Cash. So this is a simple transaction where some additional debentures are issued. Sir, if you want to do internal reconstruction means you want to survive or revive your business. For that you need rokka, money. Correct? No, not roka. Rokka. Yeah? Kannada rokka. How much money you got it here? 1,30,000. So new debentures has been issued for 1,30,000, which carries an interest rate of 8%. So simply what is the entry for this? Bank account debit. Oh, where somewhere and all they pass. Study material, I tell you. Bank account debit to 8% debentures 1,30,000. Okay, Sarji. That's all. Next one. Patents and goodwill to be written off. Sir, both are assets, both have debit balance. How do you cancel something which has debit balance? Credited. Here, the debit will be given to our Daivame. Who's what here? Reconstruction account. So the journal entry will be reconstruction account debit to, there is reconstruction here, yeah, to patent account to goodwill account. How much is the patent shown in our book, sir? 1,30,000 and 37,500 respectively. That is what they have credited over here. Okay, yeah? Alright, just observe, even if you don't have these notes, not a big deal. All these are some are study material questions, some are RTP, MTP question. I can share the notes to you later also if you want it. For now, just check the screen. Don't waste your time in searching. Where is this note? So what this guy is saying and all that. Revise means just aram se sit with me. Whole day we will cover. If you want, I'll share the notes with you at the end of the day. Just be with me. Okay. Next, what is next? Inventory to be written off. Written off by, written off to Allah. Always in this chapter, concentrate on the word to and by. If they use the word by 65,000, that means its value itself is reduced by 65,000. What is the journal entry to write off inventory? Same. Reconstruction account debit to inventory account. So have they written inventory by 65? Yes. Next, Artha adjustment NAPA. Amount of 68,500 to be provided for bad debts. If bad debts means it will affect what? Your creditor or debtor? Debt provision for doubtful debts, what do? You will show it separately in balance sheet or reduce it from debtors? Reduce it from debtors. So indirectly, what are they trying to say? Debtors is reduced by 68,500. So what is the journal entry for this? Debtor has debit balance. How do you reduce it? Credited. So debit will be given to reconstruction or capital reduction account, debit to provision for doubtful debts, or you can directly write trade receivables. It's fine. This provision for doubtful debts, any which way we'll reduce it from debtors and balance sheet. Okay, next is what, sir? Remaining freehold property after giving to the debenture holders are revalued at 387,500. One freehold property or one portion of freehold property debenture holder took off. Freehold property means maybe your building. We had two buildings. One building debenture holder took off. Another building is there. Its value is same or it is revalued? It's what is its revised value now? 387,500. Okay, go back to your question. How much is the total freehold property ka value? 4,25,000. Sir, in this 425, book value worth 1 lakh was taken over by debenture holders. So in this 425, 1 lakh book value worth of debenture was taken over by somebody. Have they already accounted this or pending? Already done. Now in this 425, 1 lakh book value is already taken over, means how much is remaining? 325. So the value of freehold property remaining with us is 325. Is its value 325 now or increased? Increased. It became how much? 387,500. Currently we are showing it at 325. Its revised value is 387,500. So this freehold property, has it reduced in value or increased in value? Increased. How much? 62,500. If a freehold property ka value is, if it is increased, means should we pass journal entry or ignore? You have to pass journal entry. What entry? Asset value you need to increase. So what is the entry? Reconstruction account, or rather asset account. What is the name of the asset over here? Freehold property account debit to reconstruction account. How much value? 62,500. Both they have clubbed together and passed one journal entry. Is that okay? See, earlier we already got 20,000 here. Now we got how much? 62,500. Both they have passed combined journal entry. If you don't like this, you can pass separate journal entry for 20,000, separate entry for 62,500. That is also same. Aliyalla Magala Ganda Gundal. Okay. At the adjustment Paklamapa. Okay. Investment sold for 1,40,000. What is the value of investment in your balance sheet, sir? Check where is the investment here. 55,000. Correct? No? Hey, super duper. Noda. Come to note number 7. Yeah, investment ka value is 155,000. How much was it sold for? 1,40,000. So you made loss or bumper profit? Profit. What is the journal entry? Bank account debit. Where first we'll find journal entry. Wait. Study material. Now finding that only is a big thing. Yeah. Bank account debit 1,40,000 to investment 55. To road trade profit on sale we will transfer to P&L. Sir, in this chapter P&L are you keeping or cancelling? So every expense, every income, everything will be routed through reconstruction or capital reduction account itself. So there's nothing but your profit on sale that also will be transferred off to reconstruction account itself. Yes, super. Next, what is next? Directors accept settlement of their loan to the extent of 90% by allotment of equity shares of 2. And as to 5% in cash, balance 5% waived off. So that means 100% of directors' loan is cancelled. Can I say so? Yeah. To the extent of 90%, they want new equity shares. To the extent of 5%, they are saying, give me cash. To the extent of another 5%, they are saying, we will waive off, meaning they will sacrifice. That means 100% of the loan is cancelled or settled. What is the value of directors' loan in the balance sheet? Check. How much is that? There, not able to find only. Noda. Okay, in notes to accounts, we will see. Yeah, loan from directors, how much? 1. He got it over here. So this is a liability. It is settled. What's the journal entry? Debited. Loan from directors account debit. How much? 1 lakh. Yes. To the extent of 90%, what did we give? Equity shares. If company issues equity shares, will you just write equity shares or it is equity share capital? For the company issuing shares, it becomes equity share capital. So you'll write to equity share capital 90,000. Another 5% they told, give me cash. Gandhi note. So that means you'll write to cash or bank 5%. Basically 1 lakh of 5% this is. 1 lakh of 5% will give you 5,000. Another 5% they only put themselves. Goinda. Another 5,000 is a waive off that goes off to capital reduction account or capital reserve account. Sir, you will cover entire syllabus, sir. Somebody is asking first day only. If you are not planning to cover, we will not attend only, sir. I will cover. Don't worry. Leave that portion to me. Yeah? You focus on just on coming on time. Leaving time, I will tell you. Yeah. Come on time. That's all. Okay. Next, anything else is there, sir? There are capital commitments totaling 2,50,000. So there was some contract we had. The contract value is how much? 2,50,000. These contracts are cancelled. Sir, if you cancel a contract midway, the other party will keep quiet or he'll demand some penalty. He'll demand some penalty on payment of 5% of contract price as penalty. What is the contract price? 2,50,000. And that he's asking 5% penalty means what? This is 12,500. Yes. So penalty is a loss for the company or expense for the company. For this journal entry, you'll write P&L to bank. No. For all the expense in internal reconstruction, the entry will be reconstruction account debit to bank account. They would have passed as a compound entry. Somewhere check in compound entry, this will be there. Capital reduction account debit to bank, 12,500. They study material always prefers a compound entry. If you don't like compound entry, pass separate entry also, it is acceptable. That is your presentation. Ignore taxation and cost of the scheme. Show journal entries. That's all. Okay, now sir, journal entry we have all done. After this, they will ask one topic which can come in any topic, that is balance sheet. Balance sheet is one that is extra fitting. It's like us, we will fit in anywhere. Okay, it's like that. Okay, anywhere, any chapter may they can say prepare of balance sheet. We have preparation of balance sheet as a separate topic. There we will do it in detail. Here I'll not worry about it for the time being. Is that okay? But before that, I want to know how much you have studied. Can you give me a quick recap? What is the format of balance sheet? Just for my satisfaction. Yeah, balance sheet of which company here, sir? Balance sheet of A and Co. In bracket में one word you should not forget, that is called and reduced. Whenever you prepare balance sheet, you have to remember to add this words extra fitting called and reduced. That is one. And other format of balance sheet without looking at screen. Well, I'll push it off that side. Tell me, heading is what, sir? First, equity and liabilities. Under that, point number 1, shareholders funds. Under shareholders funds, point number A, share capital. And you prepare note number 1 for share capital. Under share capital, you will show equity share capital and preference share capital. No time means show equity share capital, preference share capital here only. Time is there. If your writing speed is good, means prepare note number 1 and show. Okay. Then reserves and surplus. Here only one reserves and surplus will come. That is, after doing all this activity, if reconstruction account has a balance, you need to transfer it to capital reserve. In fact, 2 entries we have not done there. Once again, I'll come back to that. Okay, that is your reserves and surplus. Then point number 2 is your non-current liabilities. Under non-current liabilities, you will show long-term borrowings. Under long-term borrowings, you will show debentures, bank loan, if any. I think it is there here. Then all your current liabilities like creditors, outstanding expense, bills, payable, etc., etc., etc. will come. Then Roman letter 2, assets. Under assets, point number 1, non-current assets. Under non-current assets, point number A, property, plant and equipment. We don't call it as fixed asset anymore. Instead of fixed asset, we call it as property, plant and equipment. Then if you have any intangible assets, show that. Then if you have any investments, show it. Some others are also there. We are only discussing the common things. Then it's your current assets. Show all your current assets, blah, 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 blah. That is your format of balance sheet. Just take the data and dump it into the format. But due to one easy way to prepare balance sheet here is check the journal entries. Check the always keep. Don't check question ka balance sheet and prepare solution ka balance sheet. If you want to identify which component is there, refer question. But to get to the value, always check the journal entry. Like just to give you an example, how to prepare quickly over here. First, you have to show equity share capital. Don't go back to question ka. Question will give you 101 data. Here only just check. Where and all have you credited equity share capital? Here. First, you credited here by how much, sir? 1,50,000. Then here you credited by how much? 24,000. Maybe we'll do parallelly preference share capital also. How much is preference share capital ka you have credited here? 3 lakh. Here you credited again equity share capital by how much? 24,000. Anywhere else you have credited? Only journal entry. Check journal entry. Here again you credited by 90,000. Anywhere else? That's all. That's all. So add this now. How much it will be? 240. So 264. This is 3. That means the total value of equity share capital in balance sheet has to be 5,64. Check solution ka balance sheet. 5,60. That's all. So don't have to look at question ka data at all. Okay. Only journal entries and go on doing. This way you will never go wrong in balance sheet. Balance sheet and all in this topic, if you go wrong, no, my blood will boil literally. Okay. Literally, whether yours will boil or not, mine will definitely boil. Because it's very, very simple, sir. Just look at the journal entry and go on updating the amount. Okay, some asset value would have reduced. So reduce it. Some asset value would have increased. Increase it. Okay, just one more thing for me. Tell me what is the value of freehold property here? There is one adjustment around that. No, that only one portion you tell me. I've shown you over here. Tell me what is the value of freehold property. Everybody type in and tell me. Let's see how will you have paid attention till now. Freehold property ka value. Goinda. Hey, not Goinda. Tell that. It's here only. What is the value of freehold property? Perfect. 3,87,000. Fine. So they only gave in the question, sir. Remaining freehold property is valued at 3,87,500. So what are you wasting your calculator and energy for? They only told remaining freehold property ka value is 387. Fine. That itself will come in your property, plant and equipment to the extent of freehold property. Like that. Okay. Rest of the assets you want me to show, or is it okay? Manageable, this much is okay. All right. Whatever assets is reduced, reduce it. Best place to look for increase or decrease is journal entries. Okay. But in this problem, couple of journal entries we missed. Can someone point out me what are those things we missed? Sir, whether the problem says or not, two things we need to compulsorily do, which is what? Transfer or first cancel off P&L ka debit balance. Did we see anything that in the adjustment? No, they will not give because it is a hidden adjustment. First, you need to prepare reconstruction account called a ledger balance. You need to prepare here, they've not done, it's okay. You need to prepare reconstruction account or capital reduction ka ledger. That will give you how much balance is available. If you have balance, you have to compulsorily write off P&L. What is a P&L balance over here, sir? P&L balance here reserves in surplus. Debit balance of P&L is how much? 535. If you have balance in reconstruction account, will you cancel this? Yes. What is the journal entry? Reconstruction account debit to P&L account. I think they have passed it over here. Reconstruction account debit to P&L account. 5,35,000. Even after writing off P&L, still if reconstruction account has a balance means transfer it to capital reserve. So that particular ledger or capital reduction ka ledger or reconstruction account ka ledger will give you that particular balance. So I have to present it in ledger only? No. Just present it as a statement or as a ledger based on your convenience, but do present it. Okay. And the writing speed has to be extremely good. Okay. Only then you will be able to complete the paper. Okay. I'm already telling you, paper will be lengthy. Don't crib later on. Okay. Paper was very lengthy, sir. Everything you taught, we remembered, sir. We knew also, sir. But still I did not complete, sir. Don't give that excuse. Okay. From day one, I've been telling you paper will be lengthy. Which paper depends. One or two papers in each attempt will definitely be on the lengthier or tricky side. So don't worry about something if it is tricky or something if it is lengthy. Don't freak out. You don't have to get 100 on 100 to pass. The passing marks is 40 in single paper. In aggregate, mein 50. But our target should at least be to score 65 to 70. Because if you get aggregate, that particular group will be passed. Okay, so the target is don't say, oh, I'll only try 50 and all. It'll be difficult. Always try to get exemption in one or two papers so that the whole group will get cleared out. Okay. So focus more on your strengths. Whatever topic you feel you have absolutely comfort with, where you feel you have not done any, you will not do any mistake. Answer that first. The moment that you answer one question with full energy, with full properly, automatically the confidence level that you get, sir, will drastically increase. That will help you to tackle tricky questions. So CA exam is all about confidence game. So don't take the lengthy questions and all first. Take the question which is little less lengthy and which you are more comfortable. So that you, when you solve it on time and if you solve it perfectly, automatically you will get that separate feeler. Then automatically hands, things, everything will start moving faster, which will help you to score better in exam. That's all is a simple trick. Keep this much as simple or as clean as possible. Don't take too much pressure. After all, one zindagi, only one exam. Okay, many of thousands of people have cleared. You will also clear. Already cleared also. Yeah, me can clear means you only. Yeah, like that. So it will happen. So keep the confidence high. So that is one. So can I go for some next questions? I plan to do not just one or two, 3 questions like this. I'll go on. Someone is saying, sir, you did tell your dialogue. Throw pencil and scale. Yeah. Throw pencils and scale out. Do not use that because we will not have time. Not that people are remembering so much. That's the reason I told. Love and support you are showing. No, that dialogue and all people are coming and telling us. Thank you so much. Yeah, amazing. But I'll try to keep up. Yeah, I'll try to keep up the same work for the next batches. Also, probably try to put in a lot more effort in that direction. Okay, awesome. Can I get to the next question? Sir, this is RTP May 2024 question. So let's run through this. Shareholder. Okay, as part of reconstruction scheme of Getting Better Limited. What a name. They are only getting better. So we'll make them better. Yeah. The following terms were agreed upon. Shareholders to receive in lieu of their present holding. In lieu, the English word in lieu means instead of. Instead of their present holding, they want something else. So they want present holdings or we have to cancel it. We have to cancel because they don't want. Who are these guys who don't want? The shareholders. Currently, how many shares we have? 10,000 shares of 50 each. That means, sir, if they don't tell what type of shareholder, we always assume it as equity shareholders only, because preference shares are optional. Equity shares are, if a company is surviving, if a company is there, means obviously they will have what? Equity shares. Preference shares may be there, may not be there, we don't know. So if they just mention equity shareholders, you always take it as equity shares only. So how many equity shares? 10,000 or 50 each. So instead of this, we need to give something else. What and all we need to give? 15,000 fully paid up equity shares of 10 each. Sir, what was the original face value of the share? 50. Now it has become 10. So what is the entry you will pass? Old shares fully you need to cancel. What is the entry for this? Where is it, pa? Going down. Oh, here. Equity share capital. Don't write share capital. Write it as equity share capital account debit. How much? 10,000 into 50, which is 5 lakh. To what account, sir? They have written just share capital because we don't know the value. You can write equity share capital, which in my view is okay. To equity share capital, how much? 10,000 into what is the new face value? 15,000, right? It's not 10,000. Huh? Okay. I wrote number wrong. 15,000 into 10 it is. First one correct. The second one going there. Okay. So this is 10,000 into. Pen and all is doing creativity today. Okay. 10,000 into 50, which is 5 lakh. So how many shares are you showing? 15,000 shares of 10 each. So this is 1.5 lakh. So we have passed the entry. That's all, or some more is there? Some more. They also want, in fact, first over, they want one more, which is what? 12% fully paid up preference shares equals to 2/5 of the total equity share. Sir, what is the total equity share value? 10,000 into 50, how much? 5 lakh. Okay, now you are giving a new preference shares to 5 lakh value or 2/5? 2/5. What is the original preference share equity shares value? 5 lakh. Of that 2/5 value, you are giving it as new preference shares. So 5 lakh cut 2 by pi, how much? 2 lakh. So company issued preference shares. Did they get money or there is a barter system going on? Barter. Old preference share, old equity shares cancelled. Instead of that, we gave new equity shares and new preference shares. If a company has issued preference shares, means what should we credit? Preference share capital. What percentage preference shares are these? 12%. So what will you credit? To 12% preference share capital, 5 lakh cut 2 by 5, which is 2 lakhs. Show the calculations better. For you also, for the evaluator also. Here only. No need for any working note. Here only, like the way I'm showing in brackets, show it. That's all. No. Next, what did they say? To pay them 50,000. So 50,000 we are paying. How? Paying means obviously through cash or bank. So what will you write here? To bank account. So entry completed. No. Still a lot of things are there. To bank, 50,000. Anything else? And the transfer the remaining to reconstruction account. Balance, if you have to pay anything, means they are ready to sacrifice. That will be transferred off to reconstruction account. To reconstruction account calculated or balancing figure? Balancing figure is 1 lakh, which we transfer to reconstruction account. Yes, Saru. First entry done. Can we go for second one? Okay. 8% preference share capital ka value is 3 lakh. To write down the value of preference shares to 50. Original face value was 100. So preference shares same or face value reduce? Whenever face value reduce, can you pass the journal entry only for sacrifice or full? By full we mean old preference share capital should be fully cancelled. Issue new preference shares to the extent of new face value. Balance you transfer it to reconstruction account. So what is the journal entry to preference share capital has credit balance? How do you cancel it? Debited. So the entry will be 8% preference share capital. Always write the percentage better. 8% preference share capital account, how much? 3 lakh. To what account, sir? From 100, the face value got reduced to 50. From 100, this became 50. That means indirectly they're telling how much? 50% is a sacrifice, correct? So that means what will be the value of new preference shares? 3 lakh ka 50%, which will be 1.5 lakh. 50% they sacrificed, for the 50% they want. Preference shares has been reduced. That's all. So you'll write here to 8% preference share capital 1.5 lakh, and to balance to reconstruction account. That. Next, what is next to 14% debentures of the nominal value? Nominal value means face value 2 lakh along with accrued interest of 56,000 was waived off. Hang on, read further. Was waived off for 3/4 of the total amount. So entire thing is sacrificed or only 3/4? 3/4 of the debenture value and 3/4 of the interest. Both are waived off. Okay. And balance. Balance means 1/4. The balance, what do they want? Cash. 3/4 extent waived off, 1/4 extent settled in cash. So is this debenture there in our books or fully cancelled? Fully cancelled. Some by sacrificing, some by payment. So what is the journal entry will pass? Both these are accrued interest and debenture. Both are liability. They have what balance? credit balance. How do you cancel them? Debit. So the journal entry will pass as 14% debentures account debit, 2 lakh. Interest account debit, 56,000. There's not interest, it's actually outstanding interest. Okay. So to what, sir? Calculate. To bank account, this if you add, how much are you getting? These two addition will be 2 lakh 56,000. Full 256 are you paying or only 1/4? 1/4 extent. To 2 lakh 56,000 into 1/4 extent we will pay settle. To bank you'll write. Balance 3/4 it's sacrifice. So you'll transfer it off to reconstruction account. Fine now. Great. Anything else or that's all? That's all. So sir, if they don't say anything, we have to still do write off what, sir? P&L debit balance. Have they told anything? No. So that means if P&L debit balance is not there, means check. Does reconstruction account has any balance? Yes. If reconstruction account has any balance, what will you do for that? Transfer it off to capital reserve account. So that's what they've done here. Because P&L ka debit balance information is given or missing. Missing. That's the reason entire amount of reconstruction they have transferred it to capital reserve. Like that. Okay, Saru? Alright. So this is about Chintu problem. No, correct. Chintu on. For your level, what as I told, no, nothing is big. Okay. Yes, only few questions in this reconstruction account will be 1 or 2 adjustments may be trickier. Rest everything will be rinse and repeat only. Okay, almost 80% of this chapter runs through the same thing, recycling process. 1 or 2 or 3 adjustment maximum may be little different. So at best, even if you don't know them, at best still you will get what, sir? 80% of the marks. Out of 10, if you get 8, I'm happy. If you maintain the same aggregate, 100 ka 80% is 80. Full happy. Yeah, like that. Okay, keep like that. It's okay. 1 or 2 things will definitely don't go wrong in examination. Maybe intentionally or unintentionally something will happen. Okay, it's happened. Maybe it'll happen for you also. I wish that it doesn't happen, but it has definitely happened to me. Though I'm teaching accounts, I didn't score 100 on 100 in accounts. Nobody, most of them don't do it. I think only one person in India all level has scored 100 on 100. I think maybe Sarvana Prasad or someone, if my memory is correct there. Only one in the history of 65 years. Okay, because that is very, very rare. Because study material no, or evaluator no, or full Dharala Prabhu when it comes to reducing the marks. Okay, giving the marks, they are very, 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 very not stingy. Careful. Okay, let's not call them stingy. They are super duper guys. We want marks, no. We have to praise them. Pa. Okay, next is the MTP 2024 questions we have given. So let's take up that. So balance sheet, should we have to worry about balance sheet or not required? Not required. Directly dive into the adjustments. But maybe one thing in balance sheet you can keep aware of is the face value. Because face value of equity shares and preference shares will be same or it will get reduced. So just underline that. Don't underline MCQ questions and all. Okay, now it's you have to be very careful what you're underlining and all because it may look a silly matter, but it may be a grave mistake. Because if you are confiscated means you can't attempt. I don't know the exact provisions. 1 or 2 attempts I don't know what's the rule. 2-3 years or 2 or 3 attempts you're not supposed to. 3 years you're not supposed to attempt the paper only. So silly mistake, maybe unintentional, but it is very difficult to prove all these unintentional mistakes to the invigilator because he doesn't know you, nor do you know him. Okay, so be careful. Okay, what you're underlining and all. If you want to play it safe, don't underline anything. Directly do whatever you want to do. Write it in answer script only. Later on, if you want, you cancel answer script. It will not be awarded. Once you cancel, write something, and if you write this cancel off, no, it will not be awarded. People will not check that. Like that, if you do to play it on a real safe side. Okay, directly come into adjustments. Preference shareholders will give up 30% of their capital in exchange for allotment of 11% debentures to them. So how much are they giving up? 30%. Okay, in allotment for exchange of debentures means what are they trying to say is 100% of the preference share capital cancelled. For 30% extent, they're ready to sacrifice. For balance 70% of them, they want debentures. So 100% of the preference share capital is cancelled. Okay, Saru? Alright, how much is preference share capital, Saru? 6 lakh. So what is the entry? 8% preference share capital account debit, 6 lakh. How much is sacrificed? 30%. So 6 lakh or 30% is 1,80,000. That you transfer it to capital reduction account. Balance you transfer it to, what did you give them? 11% debentures. Calculate one and other one you arrive it as balancing figure. Don't waste time calculating both in exam. One is good enough. Okay, next one. Debenture holders having a charge on plant and machinery would accept plant and machinery in full settlement. So always pay a key attention whenever a debenture holder or creditor is taking over some asset. Always check, because in our mind, no, we always say it is sacrifice. The moment internal reconstruction, we always think it is sacrifice. It need not be. In the previous problem, debenture holders took it in part payment. Okay, but always check here what are they using the word? Full settlement. Full settlement means 100% of the debenture value you need to cancel. What is the value of debenture? 12 lakh. What did they take over? Plant and machinery. What is plant and machinery ka value? 9 lakh. for 12 lakh worth of liability, they took over asset only worth 9 lakh. So, and this is part settlement or full settlement? That means 3 lakh rupees, what is that? Sacrificed, which will be transferred off to reconstruction account. So the entry will be what? 9% debentures account debit 12 lakh to plant and machinery 9 lakh, and balancing figure is capital reduction account. Okay, sir. All right. And also in narration also I had given you some keywords. Anybody remembers? Whenever equity share capital, preference share capital and all is reduced, always use the keyword approved scheme of reconstruction dated ... Always write this term. Approved. Don't remember? Huh? Okay, no problem. Approved scheme of reconstruction dated ... Like being preference has reduced as per approved scheme of reconstruction dated ... Write this in one or two narrations. Wherever equity share capital, preference share capital is reduced, write these words. The keyword there is approved scheme of reconstruction. Rest everything your vocabulary, your this thing. Don't give galis and all. Write it in your own simple terms. But narration is compulsory. If there is a journal entry, it has to be backed by a narration. Only if the problem says narration not required, then you can skip. Otherwise, compulsorily you need to write it. Okay, sir. Next is what, sir? Inventory equal to 5 lakh in book value will be taken over by trade payable in full settlement. Sir, what is the value of creditor they give in the balance sheet? Check here. How much is that? 5 lakh? 92. What did they take over? Inventory. What is the inventory value they took over? 5 lakh. For 592 worth of liability, we gave inventory only worth 5 lakh. So remaining is what, sir? Sacrifice. So the journal entry will be trade payable account debit 590 to inventory 5 lakh to reconstruction account 92. Either use reconstruction or capital reduction. One journal entry may don't use one. Either capital reduction or reconstruction account for all the entries of your choice. But only one. In one problem, only one. Okay, like that. Next, investment to be reduced to market price. So currently, what is the investment value? 68. From that, market value reduction is 55. So investment value is increasing or reducing? Reducing. Entry is what? Capital reduction to investment account. How much is the reduction? 68 minus 55 is 13,000 is the reduction. Okay. Yes, Saru? Not profit, loss. From 68, you're bringing it down to 55. So loss. Company would issue 11% debentures for 3 lakh. So they're issuing debentures for 3 lakh means there's nothing but debenture is issued for cash. What's the journal entry? When we use the word term cash is loosely used. Cash here refers to cash in hand as well as cash at bank. So what is the journal entry for issue of debentures? Bank account debit to 11% debentures. 3 lakh, 3 lakh. Then, and augment its working capital requirement. To meet their working capital requirement, they issue the debentures. They can issue for whatever joy. What do we care for it? Yeah. After settlement of bank overdraft. So bank overdraft there or settled? Go back to your balance sheet. Do you see bank overdraft anywhere in your balance sheet? Yeah, bank overdraft, how much is that, sir? 1,50,000. This is there or settled? Settled. What is the journal entry for liability? Not sacrificed, settled. Entry is what? This liability has credit balance. If you have settled it, you have to cancel it. How do you cancel something which has credit balance? Debiting it. So the entry will be bank overdraft account debit to bank account. That is the entry there past here. After doing this drama, if first of all check if P&L has a debit balance here. Reserves and surplus has a debit. Check. Come to note number 2. How much is the debit balance of P&L? 4 lakh 5,000. So can we keep it as it is or we need to cancel? Cancel every problem? Yes, provided reconstruction account has a balance. So here I think we do have balance. Hence that's the reason entire P&L they have written off. If you have only 3 lakh balance. Suppose capital reduction account or reconstruction account has only 3 lakh balance. In that case, what you will do? Write off P&L only to the extent of 3 lakh, like that. Okay. Suppose you have 5 lakh balance. Then don't write off 5 lakh. How much P&L balance is there? 4 lakh 5,000. Write off P&L to the extent of 4 lakh 5,000. So in 5 lakh, 4 lakh 5,000 gone means how much remains still? 95,000. That will be transferred of where? To capital reserve. That this particular information you will get when you prepare capital reduction ka or reconstruction account ka ledger. Okay, either present it as ledger or as a statement, your choice. So if still any balance remains in capital reduction means that will be transferred off to capital reserve. That's the thing. Okay, Saru. Yes, sir. But one more thing you need to keep in mind. This they are doing in the latest format. Mein. Sir, bank overdraft. No, check here. Maybe I think it was there in the last problem. It missed out. I'll come back to the last problem only. Maybe it's better. Here. This is the first problem we covered, right? Here. Check. Are you having bank overdraft, sir? Yeah. How much is the bank overdraft in the question ka balance sheet? 195. Okay. Some problems ICA is doing this. Some they're not doing. Sir, bank overdraft is a cash equivalent. Bank overdraft is a cash equivalent. So in some problems, what ICA material does is they'll show bank overdraft separately under current liabilities. In some problem, they'll reduce it from cash because it is what? It is a cash equivalent. The main category in balance sheet is what, sir? Under current assets, we have cash and cash equivalent. Cash and cash equivalents have what balance? Cash and cash equivalent have a debit balance. Let's say cash and cash equivalent balance is 5 lakh, or in this problem only we'll take it. Or we'll leave it. It's okay. I'll just tell. Cash and cash equivalent has a balance of how much? 5 lakh. Cash and cash equivalent here refers to cash in hand as well as cash at bank. It has how much balance I've assumed? 5 lakh. There is also an overdraft. How much? 195. This overdraft they'll not show it on the liability side. Instead of that, they will show it under cash. But the problem here is cash has debit balance. Overdraft has a credit balance. That means what you will do? They will reduce the overdraft. How much is overdraft in this problem, sir? 195. So this they will reduce and the balance will become how much? 3,05,000. So this 3,05,000 will be shown in the balance sheet. You also do the same approach. Some problems may they are doing this, some problems may they are not doing it. I suggest do it like this only in every problem better. Okay, Saru? Fine. This is the one thing. Strategy attempt full marks. Last minute, sir. Let's not waste time during the topic discussing the extra things. The first priority is we will finish off all the chapters first. Last day I will give you some strategies, whatever I think or some of the things which I followed, I'll share with you. Last 10-15 minutes on the marathon day, we'll keep it as general discussion. For now, every time if we're discussing, it will lead to a wastage of time. So let's not do that. Is that fine? End maybe we'll do it. Some things, if it is important, if I feel I'll forget it off, I'll share it right in there with you. Otherwise, we'll do it at the end. Okay, great. So with this, all this chapters, if you see RTP, MTP question, any dumb in this question or nothing? Nothing. So just with this particular topic, I think we have 1 minute. I'll quickly run through. I think all the adjustments of this question we did now. Yeah. So this particular question or this particular chapter we have completely revised. Thank you so much.